Are you a real estate agent and dreads tax season and finding out how much taxes you actually owe? Well, if you wait till April, you're going to be hit with a large penalty. That's because the IRS doesn't want you to wait till April to pay all your taxes. They want you to pay it in as you go. And when you don't make them in quarterly estimated tax payments, they can hit you with a costly underpayment penalty. In this video, I'm going to go over what that actually is and how you can simply avoid those and calculate out those estimated tax payments for yourself. Right, so who actually needs to pay quarterly tax payments? And that is anybody that owes more than $1,000 of taxes. Now, it's going to apply typically to people that are self-employed or in business for themselves. If you're earning money in something like a W-2 income, you're withholding and paying that money in as you earn it, which is effectively the same thing as those quarterly estimated taxes. So these estimated payments really apply just to agents and any other self-employed individuals. When they're due. So they're due obviously quarterly, but they're not actually on the exact quarter dates. They're a little bit off. So the first one's actually due April 15th when your prior year taxes are due. That's when you have to start paying those quarterly taxes for the current year. April 15th, June 15th, September 15th, and then the following January 15th following the year of those estimated tax payments. January 1 trips up a lot of agents because it still applies to last year's income, even though you're making it, or the due date rather, is in January of the subsequent tax year. Now, these are just estimated payments paying towards your taxes. These aren't an additional tax. They're just prepayments in a sense to what you end up owing when you do file that tax return in April or whenever that might be. So how much do you need to pay? Well, there's a couple things that are called safe harbors, and if you make these minimum payments, then this underpayment penalty that I talked about, you can avoid that. You may still owe more taxes, but these are the minimums you need to pay in order to avoid that penalty. And you can do it two ways. You can do 90% of the current year tax due balance, which of course you're not going to know. You can estimate that off of your income, but you don't know what you're going to owe until you actually file that tax return. So it's a little more complex in that you have to actually do a calculation to estimate what that 90% of your taxes due are going to be. The other one is a little simpler, is you pay 110% of the prior year taxes through those quarterly estimated tax payments. It's a little easier to calculate, figure out what your total tax was last year, multiply it by 110%, divide it by 4, and that's how much you should pay each of those quarterly due dates. Right. And so this is all about avoiding penalties. It's just a prepayment towards it. Underpaying those quarterly taxes just leads to a large or a potentially large penalty on your tax return. Some common pitfalls is just waiting till April. If you wait till April, obviously you're not paying it in as you go, and you're going to be hit with some underpayment penalties. Guessing that amount, if you just guess the amount, then you may be underpaying still and still getting assessed some of those underpayment penalties. The other pitfall is your state income tax. If you have state income tax, there are some rules around quarterly estimated payments on state income tax, depending on your state. So make sure if you have a state income tax, you're not only paying quarterly for those federal taxes, but also your common state for your state as well. So how do you set up a system so you can avoid these and don't get hit with this underpayment penalty? So one thing you can do is actually get some good bookkeeping software like a QuickBooks Online. That way your accountant or your CPA can know exactly what your income is for the quarter if you want to get estimated taxes close to that 90% or close to what you actually need to know, or what you would actually need to pay. So that's the good way to get a good calculation, is to actually have bookkeeping so you know where you stand. You can automate some payments if you're using the 110% method and you know exactly how much you're going to pay each quarter. You can go ahead and automate those and set those up through the IRS website. That's the easiest way rather to make any payments. And then once you're set, just remember that money's coming out and plan for that, but you don't have to do anything else throughout the year. One way to make sure you're saving enough for that is just keep a portion of each commission check that you earn and put that in a separate account, a tax savings account. So a portion of every commission check income you get builds up in this this tax savings account, and that's where you make your estimated tax payments out of. That way you're planning ahead each and every time you actually have income earned. So it's something that doesn't need to be stressful. It's something you need to do to avoid those penalties. Some people just pay the penalties and avoid the tax or avoid the headache, but it's really not a lot of headache if you actually just plan, put some simple processes in place, and then do some simple calculations of a 10%, 15% of each tax goes into tax savings, and that's what you send off. That's an easy way. If you want the full notes on this in your inbox and all future videos as well, you can use the link down below in the description and sign up for my newsletter. That comes out with every video, and it just has the bulleted outlines of all these notes to make sure you have a copy of it and you can easily follow those. Also, if you want to book some time and talk about how you can implement these strategies in your real estate business, there's a link below also to book some time on my calendar. Anyway, thanks for watching.